and welcome to this edition of CNBC-TV18 Prime Playbook. And today what we're going to be discussing is something very interesting. When you look at it, Tier 2 and Tier 3 Indian cities is set to add over 100 million new investors in the coming years. Now the question isn't just who gets the first. It is who gets there first and stays there and who is trusted as well. To join us and discuss all of this, unpack this, the story of Tier 2, Tier 3 cities, the development in India, let's bring on board Ashish Rathi, CEO at HDFC Securities right now. Ashish, thank you so much for joining us on the show. And India is a growing story. Indian investors are a growing story as well. Let's start with that, right? What does deep geographic inclusion or furthermore penetration into the industry mean? How has India changed over the years, especially the Tier 2, Tier 3 investors? What are you seeing happening there?
So if you look at what the NSE data shows, I mean, the recent data shows that overall the number of trading accounts that is there is somewhere 25.7 crores. And if you look at the unique investors, they would be around 13 crores because obviously people can have multiple trading accounts. So that is where the data is. So people who have registered for the, trading accounts, and with that you can do almost every investment in capital market segment. So that data is almost 13 crores. Now, if you look at the growth, now most of the growth now, because if you look at in cities, major cities, urban cities, so we were looking at data from NSE. So if you look at the important cities wherein cash volumes happen the highest, I think so Bombay and ancillary, you include Thana, MMR, entire region is the highest. The second is obviously Ahmedabad, Gujarat. Third, I think so, is Bangalore, and so on the cities come. So if you look at some of the cities where cash volumes are higher, I think so, I saw one city called Rangareddy in Telangana. So these are, and Rajkot also. Rajkot is also one of the top prime cities. So if you look at all these segments put together, and the Tier 2, Tier 3 is seeing a lot of traction into this. Now, why is it this happening? I think so, in 2020, when SEBI made digital account opening seamless, I think so within 5 to 7 minutes, you can open a
Account today, yeah.
trading account along with Demat and bank account. It gets open seamlessly in 5 to 7 minutes. Obviously, you can start in 1 or 2 days. So one is obviously with Jio coming in, you had a cheaper network, data availability. Second is with Aadhaar, you could do an e-sign. Third is with obviously this regulation change wherein you can open a seamless account seamlessly within 5 to 7 minutes. And fourth is obviously this UPI. UPI as a mechanism in terms of payment has become very seamless and very easy. So in a combination of this, it became very easy even for 2-tier, 3-tier cities or urban cities, whatever you may say, to get into capital markets. So what we are seeing is that there is growth in 2-tier, 3-tier cities, especially in terms of the youngsters, who is now the new generation, which is getting into capital markets. Obviously, there's a story wherein they are getting into F&O and everything. But yes, we are definitely seeing that.
Capital market story is increasing. Youngsters are also getting interested in this as well. And there's a lot of interest that is building around this. But what I want to understand on ground when you're looking at it, what sort of interest this is building? Is it more digital first? Like you said, right? Opening your accounts today has become so easy. Is it more digital first? Are there languages supporting each of these cities, regional players or regional side? When you go further in, you would require more in the regional language. Is that the support also coming in? Are there more new branches opening? What are you seeing on ground on that front?
So on ground, people have adopted to digital thing. That is what we are seeing. Okay? So the usage of app has gone up. So if someone, say, supposing is a stockbroker, now obviously he can offer services through branches, which is the relationship manager. He has the option to offer it through franchisee, which is obviously you appoint an authorized person in that method. And the third one is, obviously the digital properties. Digital properties across the board, it could be web, it could be on mobile, it could be on iPad also. So now adoption of digital properties has gone up. Okay, that is for sure. Now these youngsters are very good with digital properties. Okay, so they just want to explore like a Swiggy, Zomato. They think, okay, this also can be explored. And they start trading. And what happens is after a particular age, what we have seen is maybe 35, around that age, wherein your wealth, you start saving some more money. Okay. So that is where you need good advice. Okay. So that is where the branches and the relationship model comes into picture. So we have seen a lot of these people who have good amount of money. Then what happens is typically you become more this thing ki, okay, now I have a good principal amount. Now
You're
I
more
need a
risk averse also then once you start
yes, yes,
growing and
yes.
once your age starts increasing. You don't want to take that much risk as you would take when you're in your 20s.
Obviously, and as youngsters, what happens? It's a herd mentality
Yeah.
also. When we were also young, I'm telling you what my friend does or what my group of friend does. I tend to do that. Okay,
That's true. There's some bit of that, you're
that
going with it, following the crowd as well at some point of time.
and this is what is happening with everyone. And I can tell you, you don't listen to your parents at that age. Rather, you listen to your friends more. I think so. That has happened with us also. And so, what we are seeing is digital first, obviously, is there. But if you top it up with the good advice, I think so. That is finding traction.
That was my question as well, because advice is important as well, right? See, you're first year moving around, you're doing what you want, following your friends or whoever you're following. But when you go to a smaller town, smaller city, with age, the trust factor also plays an important role, right? They have to trust the app or whatever they are following. So then, branches wise, also, is that also seeing a significant increase? How is that going on ground, and how are y'all seeing that change as well?
So I'll tell you, in the rural areas, what we have seen is people are not putting up branches; they are putting up franchisee network.
Okay.
Let me put it that way. So franchisee network is there. There is a local person handling that franchisee. Okay. So what happens is typically in a smaller towns, people know each other very well. Okay. So if there's a local person handling, there is more comfort. There is more tendency to go and meet him. There is more physical touch. And tier two, tier or probably tier three and towns still value that trust factor a lot. If you are physically present somewhere, then you are being
Yeah,
valued.
that is something that gives you a security. Like if I am
Yes.
not, if something goes wrong, I know I can reach this
Yes,
location and
yes,
reach this
yes,
place and
yes,
ask a question.
yes. So for HDFC Securities, what we have done. So currently, what we have is we have around 124 locations covered as branches. Okay, of HDFC Securities. We do not have franchisee or authorized person network. Plus, we have the digital platform. So in terms of these 124 physical branches, we have around 1,100 relationship managers who will help you with the advice, who will help you with our research, who will help you with our products, how to use the app, everything they will help you out with. Now, in terms of the rural reach, so we had done this some experiment in terms of a few branches. Like we opened a branch long ago in Sangamne, that has yielded us fantastic results. So only 4 people, but the business has been awesome. So what happens is one is obviously they connect at the ground within the location, and they cover nearby locations also. So that gives you a lot of value add in terms of. And what happens is once you have a branch, there is a physical touch also. So people have a lot of comfort in these smaller towns. I can tell you that much. But for us, what happens is there is a larger presence of HDFC Bank also. Okay, so that they have got some 9,000. So what we do is some of our resources may not be relationship managers, but some of our resources in terms of acquisition and everything are placed at these bank branches. So that what happens typically is if a customer needs a relationship or needs a trading account, then we can capture it and help him out with the services. So that eventually helps us out to even out everything, whether it is rural, urban, or maybe semi-urban, whatever you may say.
Ashish, where or which non-metro city has surprised you in the recent time, maybe with the demand or the readiness that an investor has seen in India? Where is it that is, maybe taken aback, like you're like, oh my God, there's such good demand.
So if you look at what we are trying to do is maybe Rajkot is one of those
Okay.
cities. So if you look at, I was surprised to look at the data in cash segment, where in Rajkot figures, I think so, in the top 10 in terms of cash market volumes.
Okay.
So I don't know if there are brokers with prop trading over there or something like that, but cash segment. And what we are trying to do is we are trying to do a campaign. So what happens is whenever we start a campaign, we might select some city as a test market. So we are planning to do a campaign in Rajkot itself only, so that we can unleash the potential of that city more.
Okay.
So that's the idea, and that is the city wherein we have seen some real good potential.
In all the cities that you go or you're expanding, penetrating into tier 2, tier 3 cities, I want to know on language front. Is there a barrier on that front, or is it financial literacy, first time KYC? Which are those challenges maybe that are still there and that could be eased out? What is a bottleneck that maybe you face in onboarding these new sort of investors that come in from these towns and cities?
Yeah, I'll tell you. So language barrier. So India is a country within a country. I can tell you. See, you have 29 states, but every state is as good as a country only. So the culture is absolutely different. I mean, you go to north, you go to south, it's like
It's poles apart from
poles
each
apart.
other. Yeah.
And typically, in terms of language, I will tell you, you will predominantly see in North and Central India, Hindi being used. Whereas in you go to South, it's different languages state-wise. So yes, in terms of language, I'll tell you, South is where predominantly people want to converse in the local language, much more. Hindi, what I understand is everyone
Every-
is able to speak, but in South, typically you will find that. So, in fact, what happens is whenever we have our branches also in South and our relationship manager speaks, so it's normally on voice recording and everything, and then you try to translate it, it's a tough exercise, I can tell you. But with the advent of AI and everything, it is. But yes, in terms of South, thoda they prefer in local language, and that always helps. I mean, in any state, if you go na,
And that you all have your
yeah,
franchisees or
yeah.
partners or
Yeah,
HDFC
yeah.
Bank itself, the
Yes,
local
yes,
people where you all
yes, yes.
work.
Local people, and in fact, in our branches also, like in Gujarat, we would prefer a Gujarati to be recruited as the head, so that it becomes more friendly with the people over there, and you can resonate well. That happens. I mean, in any of the states, if you go na, obviously Madhya Pradesh, Rajasthan, Hindi also works very well. But these all locations, I think so, the local language plays a flavor in
Which
that.
is the biggest challenge then for you all when you all are going into smaller towns and smaller cities?
So the biggest challenge is the potential. See, right now we may see a potential. We enter into that city. And the problem with these smaller towns is getting the right kind of people. I think so. We are facing certain challenges in terms of some of the towns wherein getting the right set of people. So what happens typically? These are smaller towns. Okay. Now, if you look, go to smaller towns, almost everyone is doing a, I think so, business only normally. If they have to do a job, they normally tend to move to urban cities. Now that is where we find a challenge in terms of getting the right skill, right talent, and getting him on board to scale the business. That is the challenge in terms of if we were to set up a branch. Otherwise, I don't think so. Local language, you get a local person out there, that is not a challenge. Digitally onboarding customers is not a challenge. But yes, getting that local talent
Is
is the.
the
And capital markets, I'll tell you, it's a niche segment. I'm telling you, na, right now, though obviously, earlier, though it was very niche in terms
now
of
it's grown still after COVID, I think.
still after COVID, it has grown, but the complexity and the number of products which are there in the market, like you have reach, you have InvITs also now being introduced, you have F&O, you have commodity derivatives also, you have SLBM also as a product. So over there, you need some kind of talent who understands capital market very well and who is there for you in the long run. Now over there also what happens is if there are four business houses, then the talent keeps moving around four. So that is somewhere we find it challenging.
Okay. Any interesting facts or numbers that you are seeing right now in the tier 2, tier 3 cities? Given that I was asking numbers because we've seen the growth coming in post COVID, the interest that's increased for capital markets. How are you seeing that move now from here on? And what is the opportunity that you see?
So from now on, what we are saying is so the market, if you look at, is still if you look at the age brackets is what we look at. So maybe 25 to 36 is one age bracket, 36 to 45 is one age bracket, and obviously above. So what is happening in that earlier age bracket? I mean, I would start at 18.
Yeah.
Okay. Now what we have seen is people. So once you attain the age of 18, so wherein see what happened is when we started our careers, we were more from a needy background. So the surplus money wasn't there. But now if you look at our children or somewhere like that, at the age of 18, they start earning and that they entirely want to invest. So first thing that we have seen is people apply for PAN card.
Hmm.
If you all are not a minor, you have not applied for a PAN card. And what happens? It gives you another tax bracket
Yeah.
as an individual. So this is what the trend. So what we are trying to do is in tier 2 or tier 3 also, wherein some minors normally have bank accounts. As soon as they are turning 18, we try and pitch them. I think so that is what we are seeing a lot, wherein people as soon as they are turning 18, not applying for driving license, but at least opening a capital market account.
That is true. But, saving and investing is the way to go forward. And
Yes, yes, yes.
compounding, we all know the story about compounding over a period of time. So starting early is a good thing.
A-
And for your client acquisition becomes a good thing at that point
Yeah,
as well.
and mutual funds also are finding a lot of traction. SIP especially. So I'll tell you, my sister's son, he just turned 18, I think a few years back. He was the first one. He called me up. Which mutual fund SIP should I invest in? Rather he calling me up rather than me telling him.
So that is
So
the interest is surely building. But I also want to understand from a company point of view, how do you decide, right? Digital first has become the way. everyone who's young knows how to use a phone. This is a generation that is born with phones.
Yes.
They don't need physical branches or accountability on that front, but someone higher does need. We spoke about the trust coming in. How do you decide whether it is more of a branch location or digital is fine, or is the HDFC bank's branches around you is enough for it?
So before setting up a branch, what we look at is one is obviously we have now started looking more at a mutual fund data.
Okay.
Second is obviously the cash volumes on the platform because NSE releases it city-wise everywhere. Ki what is the potential over there? And supposing there is an HDFC bank branch, there's a demat section also. Ki what is there in the demat section, and obviously the potential of the branch itself. I mean nearby HDFC bank branches. So these all 3-4 combinations put together, then we decide to put up a branch. And obviously nowadays we also look at the availability of talent over
That
there.
is which you spoke about, the need
So
of it.
we need at least minimum 5 people in a particular branch. So 4 could be relationship, 1 followed by a branch manager. So that is what is also equally important. So we look at that also. Basis combination of these 3-4 factors, then we decide to put up a branch in
Which
any
is the
particular.
locations that are on the NSE data, the cash volume data, which is popping up in the small towns, tier 2, tier 3
So
cities?
which I told you, one is that
Rajkot is there?
Rajkot is Ranga Reddy as a location I saw,
Okay.
which I never knew in Telangana. Maybe it's a part of a larger town or something like that. So these are some of the locations which we have seen in NSE cash volumes being higher. So I mean in top 2-3 others are known location like Surat you have, like Ahmedabad I already spoke about. So these all locations will actually something which we can look at. And we experimented with Sangamner as a location, which is obviously a very small location, but that has worked well for us.
While we talk about trust, branches being there, relationship managers being there, there's still a fear that, smaller town consumers still have is about fraud or something that is not going to work out well. Financial literacy on that front is also not as high. It's improving, but it's not as high. How do you face those real risks? Are there some tough questions that come in from them, and the conversion of a consumer becomes tougher at that point?
No, so in terms of this, what is happening is it is more from a banking perspective. See, whatever we have seen in terms of more of cyber frauds happening from a banking perspective. So there people, I mean, especially senior citizens is what they are targeting, is what we have seen. But in terms of capital markets, digitally we have not seen much of these things happening, frankly speaking. Because what happens typically, even if you trade in capital markets, okay, you sell something, the money comes to your bank account. You buy something, money goes from your bank account. And from the bank account where it goes, that is where the tendency of fraudsters is. Unless until the entire thing is compromised, wherein you're trading,
Then all of
banking,
it is a
and
different
then all of it is a different. But these kind of questions we as HDFC have not come
not
across.
faced
Not
anything.
faced
So there
actually.
is the literacy is there and their awareness is there to when they're coming into the capital markets,
Yes,
at least on that
yes,
front. And plus the
yes,
younger generation
yes, yes,
knows
yes,
everything.
yes. Yes. They know a lot of things which we also don't know.
That
Frankly
is true.
speaking.
But would tier 2, 3 or 3 cities be the growth story for maybe India's capital market now from here on?
Yeah, so tier 2, tier 3 definitely will be a growth story, but across India it will be a growth
Growth
story.
story.
See, like I'll give you an example. Now, what is happening is certain things trigger more investment in capital. I'll tell you. So you had this chit fund thing, okay, wherein the entire East region was into chit fund, wherein you invest a particular amount on a monthly basis, okay. Now at that point, which is long years back, so then everything was clamped down, chit fund was closed and everything. So we had seen some data point wherein in Northeast or probably in East region, the the maximum searched word on Google was SIP.
Oh, okay.
So some of these things actually trigger more investments in capital markets. So people are used to a particular phenomena. I am used to investing a particular amount of money. Now, if you stop this chit fund, I will have to go somewhere else. Then they found mutual fundship to be a much better option. Then everyone came into mutual fundship. So that is what is also triggering. Now, if you look at the online gaming has stopped.
Yeah.
Okay. While I will not compare gaming to capital markets
Yeah.
because capital markets require some level of skill set, but people are used to those gaming skill sets. So we may see some part of it. I mean, it could be hardly anything coming into again capital markets because these are more regulated and thoda sa that kick factor is similar. So these are some of the things that is also propelling people to get into capital markets. But as an ecosystem, it is working well because this is well regulated. well managed, and there is an underlying, obviously, whether it is a company or something, which can give its value. Otherwise, though, everything can run away.
That's true. Ashish, while we've spoken about tier 2, tier 3, but what you put up in terms of points, even metro cities, right? What is the growth still there? How penetrated are we right now, and how much is an opportunity maybe that you still see? Is there still more growth left here?
So if you ask me in terms of growth for HDFC Securities, there is a lot of potential.
Okay.
Okay, because there are customers with competitors which I can acquire. Okay, there are newer customers who are turning 18. Okay, some of the people in the family still don't have accounts. I mean, we have seen that. So they want to open family accounts. Plus, India has this concept of Hindu undivided family (HUF)
Yes.
accounts. I think so. Over there also, we are seeing a lot of people now realizing that there is one more tax bracket which I can get. So there, and the formation of trusts, private companies who want to invest only in capital markets. So there is a lot of potential even in urban cities. And in urban cities, what happens is the value is much better.
Okay.
That
So
is what.
value is much better. How is the cost of acquisition when I compare versus metros, non-metros?
So I'll tell you the cost of acquisition, ideally speaking, na, is more or less the same.
Okay,
So
there's
if
not
you
much
were
of a
not
difference.
much of, because now everything is digital. Okay, I send the link to the customer. Obviously, in terms of what we are doing is we are having people on the ground. Okay, from where am I getting reference? That is also an equation, because for us mostly it is HDFC Bank. So for us, cost of acquisition is relatively much lower. If you go to, I mean, some of the brokers acquire through open market and
Yeah.
everything. Over there, the cost could be much higher, 2,000 rupees or something like that. But for us, relatively. But if you look at the cost of actually opening the account, it's hardly
Hardly
anything,
anything.
because you just need 2, 3 e-signs. You would do a franking on DDPI, and it's an entire digital end-to-end journey, and then it flows into your database. So it's hardly anything. And in fact, if you were to take only the cost of that journey itself.
Ashish, the next phase of growth from here on
Hmm.
for this industry,
Hmm.
what is it going to be? Will it only be digital? Will it be a mix of digital as well as branches, or only branches, or even partnerships and franchisees? That's maybe the growth strategy or growth focus phase for the companies.
So I'll tell you, it will be a mix of physical and digital. Why I'm telling you? So if you look at all the companies which went entirely digital, so if you look at Lenskart, one prime example, now they've started opening
Opening
shops.
stores, yeah.
I think so. Policy Bazaar also started off as digital, then they started opening shops. So there's a market for everyone. Okay. So physical and digital is what I feel. Wherever you need an advice, you need someone to be seen, trust factor, and physical gives you that touch. India is still a largely, I mean, if you put people into the age brackets, so 35 to 40 and beyond age brackets, people still want to meet someone physically. And probably what happens, if you look at broking as an industry, they have also enlarged it into distribution or wealth management. Okay. So if you have to do wealth management properly, you have to meet people, and there you require physical presence, because you can't probably distribute a PMS AIF digitally where the minimum ticket size is
It's so
50 lakhs or
large, yeah.
1
You
crore.
cannot have that,
So
yeah.
that cannot happen digitally. So if you have to capture that market, which is obviously a smaller market as of now, but as people income levels better and this thing, you need to have physical presence. So that is there. And typically for all normal things like a trading, I want to buy something, sell something, you can have advice. You'll want to do it digitally yourself. You don't want to bother anyone. Mutual fund SIPs, or for that matter, derivatives, commodity derivatives. Commodity derivatives is late at night. You won't find anyone also. So frankly speaking, more of it that will continue to be on the digital pace. But at least the distribution part, which is probably life insurance, it's a difficult product to buy online. I mean, I have never bought it online. Health insurance is one part which is you can do travel insurance online, but life insurance I have
Insurance is
not
something.
seen people doing it online.
True.
I mean, so those all things will continue. So every stockbroker or every capital market participant now wants to do all these things, because it is an entire financial bouquet for the customer. So I definitely think physical plus digital is the way forward. Franchise, yes, definitely is to reach or penetrate rural markets, but the regulations around that are too strict for brokers. So that whoever has set up will continue the setup. Maybe further expansion, thoda fight lag raha uda.
Okay. And what sort of investors, while we spoke about the age bracket in terms of investors, are they serious investors? Are they more on the FNO front? Are they more towards mutual fund, SIP side? What sort of investors do you see?
So
coming from the smaller towns
So
specifically?
smaller towns, they normally, I mean, it depends on the investor also, frankly speaking. I mean, some are always looking out for quick money. Okay, I mean, let me tell you.
Yes, right.
So everyone, so many a times you see people buying stock, then the stock going down, then they tend to say I'm a long-term investor. So these all things happen, but in smaller towns, the tendency is somewhere to get a quick money. Now that's not a right tendency, but that is where you will see a lot of these attraction towards F&O and everything. But the right way to actually do it, which we advise also, is to start maybe with direct equities first. Mutual fund SIPs are a very good way to start off capital markets. Then you understand the risk, then you have the appetite, then you can start smaller in, if you want to do derivatives, then you can start by buying calls or puts, which has a limited risk in it. Because we don't want to get into option writing, which is unlimited risk. So that is what the trend also we are seeing. But yes, in smaller towns, the trend is towards making quick buck, and then they want to tell their friends also, okay, I've made so much of money and all this stuff.
That is a wrong trend, but hope investors follow the right path and invest for the long term is a better strategy.
Yes, yes.
Then just going in for quick money is not the right way. Ashish, where do you see the most amount of growth now? Towns, metros, or tier 2, tier 3 cities? If I had to get a number.
So if I will tell you, value wise it will still be towns,
Okay.
and number wise it could be tier 2 tier 3 cities.
Okay, that's interesting. Ashish, thank you so much for joining us on the show, speaking with us about how the trends are shaping up in India, where investors are looking at in tier 2, tier 3 cities, what are they watching out for on digital as well as on the physical platform as well. So, thanks so much for that.
Thank you so much, it was a pleasure.